Welcome to TheoTrade. This is Don Kaufman. It's May 29th, 2019, and you are watching the TheoTrade evening video. About 7 minutes left in the trading sessions. People, this is a fairly turbulent marketplace. One of the first things that I want to display to you, though, relates specifically to the SPX, the edge of the expected move. Why am I bringing this up? You know, on the weekend videos and throughout the course of the week, whenever I do these videos, I talk extensively about anticipation of movement, and that is how the option market kind of depicts risk going forward. So in this particular case, what you're looking at here right there, that's this week. Now remember, this is a shortened week, and in this shortened week, we were expecting right around a $47 expected move. That's $47 higher, $47 lower. Look where the market happens to be effectively right now. Now I'm going to take this off and I'm actually going to put it to an intraday chart. And you can see, even though that today's marketplace has literally been Mr. Toad's wild ride, right? We are on the edge of the expected move. And the reasoning behind that is simply that's what hedging activity will drive us into. All right, so the edge of the expected move, so you guys are aware, that is, again, relates to the SPX. It's right around 2780. Again, right around 2780 is the edge of the expected move. Now, we're going to snap from there, and we're actually going to look out to the broader S&P 500 E-minis. The numbers that I have listed over here, of course, are our gravity points. So we lost the 2811. All right, where are we right now? Pretty much in no person's land out here. I'm going to kind of scroll out for just a second so you can see exactly where we're at. Effectively, this is where the marketplace happens to be. The lower gravity point over here is 2731. So if you're looking for more sell side activity to occur, paint a target somewhere around 2731. But is that going to be the case? All right. This marketplace is very much about bonds. It's very much about financials. Yeah, we've seen some volatility kind of pick up. But in this case, I want to bring up these financials because one of the things I've talked about extensively is right here. It's the 2650 level. The 2650 level in the XLF. And again, that's the financial ETF. Above it, markets have been more bullish. Below it, things have actually turned rather hideous. Today's trading session, we've been skirting again around the 2650 level. So as I go ahead and zoom in, you can see a rally is actually substantiated throughout the course of today's trading session. Yes, that has brought the S&P futures slightly higher throughout the course of the session, but all of that has actually been done on the back of these financials, which is ultimately reacting to the bond market. As bonds sold off, it allowed financials to rally. Now, the reason things are a little precarious right now is, first of all, the bonds, they have absolutely taken off to the upside. But it has not impeded upon the financials nearly as much as we would have anticipated. Sure, the financials are down, but here's a day that the bonds reversed, okay? Specifically, the ZB, well, it's still up 10 ticks on the day. Nevertheless, the bonds reversed, and, away we go to the upside. Nevertheless, okay, we believe this is still going to be kind of a key inflection point inside of the overall marketplace, and you should use it as such. And literally say to yourself, above 2650 in the XLF, markets are going to be, a little bit more bullish. Below 2650, markets are actually going to hit, again, patches of turbulence. We're going to see some real volatility kind of unfold in markets. Now, in a situation like we're in right now, okay, it pays also to read into the volatility futures a bit. And I'm not talking about looking at a volatility in terms of the charts. One of the things I look at extensively throughout the course of a trading session, especially a trading session like this, it's right here. It's the distance, if you will, okay, between this is a 21-day volatility future and out here is a 49-day volatility future. And you can see the volatility right now is still, the skew is rather flat. Okay, meaning the short duration, which is right here at about 1780, is still below the longer duration, which is sitting right here at about 1805. Now, the reason I bring this up, and you can go even further out in time, and that one's sitting, it kind of drags down a little bit. It's also sitting right around like 18. But the reason, again, I kind of bring this up is we haven't really seen any sustained, if you will, inversions of volatility, and that's when short duration volatility exceeds longer duration volatility. For example, if we shot to 19 over here and then the back, okay, was like 1850, okay, what that effectively means is the risk is greater in the near term than it is in the far term. That's when the proverbial crap kind of hits the fan inside of the marketplace. And you just have to realize, like, we've seen some pretty decent sell side activity. I'm going to go back to the S&Ps for just a second. All right, we're starting to slip a little bit. Those volatility futures, they haven't what I would term ignited. They haven't actually, lit up on the screen and said, we're going in. Although there's still, again, there's a tremendous amount of other indications, okay, of risk in here. And one of the things I think you want to be mindful of in this marketplace is that, when you look, especially on an intraday basis like today, you got to look at turbulence like this and think to yourself, all right, where are the opportunities? Here are some of the opportunities. First of all, on an intraday basis, obviously on an intraday basis, we're getting two-sided action. I mean, look, we rallied, we sold off. We rallied, we sold off. We rallied hard, okay, and we still have a minute left to go. It's absolutely exhausting on days like this from time to time. But there's actually something overwhelming that you might be missing outside of the S&Ps, right? Outside the advanced decline line, which is fairly hideous. One of the things that's really kind of catching my attention right now is that we're seeing sectors that are getting hit and hit hard, and stocks that have been decimated recently, they're rallying. Specifically today, they're rallying. Let me give you a quick example over here. I'm going to start with Caterpillar. Caterpillar, pull up a year-to-date percentage. This thing has slipped, okay, from basically being up about 15%. It's a straight shot down about 5%. I mean, you got to look at that. It's a 20% decline. It's on the bounce today. It's not doing a great job of it, but it looks like it's going to bounce. And again, I'm trying to display to you opportunities both bullish and bearish. Okay, I happen to carry a duration bearish position inside of Caterpillar. Nevertheless, this thing looks like it's going to bounce. That bounce could be short-lived. Okay, look for a bid. There's the closing bell. Look for the bid to the upside inside of Caterpillar. On the flip side of that, okay, what's on the flip side of that? Walmart. I've talked extensively about retailers, and if you've actually missed some of the calls on retail, okay, you're missing it all, because the other day we actually called, okay, we called for XLP to have some sell side activity in a duration position, and that is exactly what we saw. Again, we looked at this prior to some of that sell side activity. Effectively, what we said was, hey, the rest of the marketplace is getting ugly. XLP is going to get ugly with it. Nevertheless, Walmart remains incredibly resilient in here. And of course, the argument's going to be that it's okay, it's Walmart, we're all going to be good, we're going to hold hands. And, listen very carefully on this front. Walmart has participated in every major bout of volatility that we've seen in recent years. Okay, go take a look at it yourself. It has participated in every major bout of volatility. Okay, what's not to say that it sees, again, the exact same thing coming. So look for some short duration volatility coming. If the S&Ps are going to sustain volatility, expect that to come to a theater near Walmart here very, very soon. So contrasting kind of views. Now, another one that I want to bring up, and I've actually taken bullish positions in here, happens to be none other than Intel. Intel, if I pull this up on a year-to-date percentage, it was up about 25, 26%. Now is effectively down 6%. Granted, earnings had something to do with that, but this thing hasn't seen much of an uptick, except, of course, today. I mean, the S&Ps are down just shy of 1%. The NASDAQ is down 1%. Intel, which is a big market cap, finished up 1.5% today. All right? This is an underlying that has been scathed deeply right now and is overdue, okay, for a bounce. When I get to some specifics over here, I'd look for a bounce between 47 and 48. How I'd actually go after that, I'm not buying any stock. Probably use something like an in-out spread, and I've got an in-out spread specifically on there. You can also flip around if you want to something like AMD. Now, AMD is interesting because this one has been completely unscathed, okay, inside of the sector. Now, this I would actually look at as much more of a bearish take. Why? Because it did effectively react today to some of that sell side activity in the broader markets. This is the way that we want to kind of trade, if you will, and game the system moving forward. That is, okay, I want to exploit, if you will, sectors that are strong, sectors that are weak. The S&Ps are coming off. Volatility is most definitely picking up right now. Nevertheless, if you're looking at this marketplace and you think you're like, I can't short this right now, I would agree with you. I mean, come on, in the short duration, I think we all have to agree. This is, short term, it's oversold. Okay, I mean, whichever way you want to look at it. You're going to look at a TheoTrade like RSI. Look, it's an oversold indicator over here. In the short duration, it's oversold. Okay, and a much longer take, hey, listen, these S&Ps, call me when they're back down to what, 23, 2400 if we're going to see some wild sell side activity. But what you have to do, okay, is not necessarily just try to short the overall markets, okay, or, get bullish or bearish in here. Look, okay, to kind of take out individual positions, both bullish and bearish. Stocks that have been just decimated are going to rally, and when they do, they're going to rally huge. Stocks that have been completely and totally unscathed, like a Walmart, okay, it's going to, again, provide some short duration opportunity. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.